All right, good afternoon, everybody. Event Trader here. I am going to be joined by blue chip trader Scott Smith in a second, and we're
I'm
going
here.
to. Hey, what's going on, Scott? How are you doing today?
I'm doing good. Happy Groundhog's Day.
Happy Groundhog's Day. It's funny. I got this one podcast I listen to, Unspooled, and they usually go through some of the great movies of all time, whatever. Yesterday they did Groundhog Day, so it was pretty interesting take on it. So. That was filmed out in Woodstock here, right?
Yeah. I think I told you, right? It's not Punxsutawney, Pennsylvania, as everyone thinks it is. It's actually filmed in Illinois.
Yeah.
So pretty good stuff. There's actually a really good movie, too. There's a sci-fi version of it that came out a few years later with Tom Cruise. Live and Die Tomorrow or Die Another Day. I'm going to butcher that one. I've got to look it up. But if you like the concept of Groundhog's Day, but translated into more of a sci-fi movie. It's Live, Die, and Repeat. That's it. It's actually really good. If you like more of a sci-fi, not really the comedy that Bill Murray's Groundhog Day is, but it's pretty
Not
movie.
not a lot of effort on the title either.
Yeah, right. Live, die, repeat. Guess what happens in the movie? Yeah. I didn't. No spoiler there at all. Emily Blunt is in it because she does a really good job.
Okay.
So anyway, a little off topic there, but I guess I would, maybe it's not off topic if you consider, the movie theater stocks like AMC and Lionsgate have been, running pretty hard here the last couple of days.
Yeah, no, that's definitely true. So, we'll keep an eye on that action. But basically, what Scott and I are going to do here is we got about a month of earnings under our belt, and we want to just kind of take a look back at some of these charts, see if there's any opportunities. We'll spend a little bit more time on names that are looking of interest to us, and kind of talking a little bit about the price action that we're seeing and how we could use that going forward with some of the upcoming earnings. Hopefully, we could spot a few trends that gets us out there. So
cool. And I'll be in charge of the charts here, Gav, when you talk.
yeah. So we are recording this too. With the new system, we haven't tried recording yet, so hopefully this goes okay, and therefore you'll have this as a little bit of a backdrop for it. I'll try to do a good job at marking when we're talking about names, things along those lines, but we're going to start off. So really the first couple of earnings popped out around January 7th. Now, if you want to follow along, you can always get in on do a search under the event ticker. And every day and a lot of the evenings, I recap some of the earnings and provide a little bit of color on what my thoughts are on it. And we're going to use that as the basis for the names that we're looking at. If there's any names that I've reported that you're curious about, feel free to write in, and we'll certainly do our best to get around to all of them when we can. So that is what we're going to be looking at. What's up?
Yeah, let me just show on the screen here too, if anybody is not familiar with the calendar, the earnings calendar. So from the main page, I usually like to stay on the dual setting. I have one side just strictly for headlines, and the other side mostly for trading commentary and stuff. But underneath that middle column, that drop down that says calendars, first choice is earnings results. And if you just click on that, you're going to see the current days before the opening and after the close earnings reports to come out. So you can see that obviously up here we have Google and Amazon are the big ones that everyone's going to be watching. Amgen and Chipotle are kind of interest as well. And if you want to see for the week, there are these subheadings over here on the right side of the page that says tomorrow or for the week or for the upcoming weeks, and you can get a sense of what we're focusing on as well. So
Yeah.
I'll let Gavin, you could just run through this list here, or you could just stay with your event highlights.
I'm staying with the event highlights because it's
Okay.
a recap, so it's going to be a little bit easier for us to do it. I cover most of the major ones for sure.
Yeah, of course. Yeah.
First one, we'll take a quick peek at. I don't know if it's really viable because it's been more caught up in the whole GameStop frenzy, but Bed Bath and Beyond. We're starting off with January 7th. There's a number of good reports, including Bed Bath, Conagra, Constellation Brands, and WBA Walgreens. So we're going to just recap those first. And Bed Bath and Beyond, I don't want to really take too much out from the earnings report, given the amount of activity that's gone around this one. It obviously ran from that 20 area. Now, at the time of its earnings report, I would note that it was trading around $21 here, and then proceeded to come under some selling pressure there. And at the time, I noted how surprised I was at the poor performance, um, because there was one area that I had in my expectations. They had rolled out their Christmas tree shop, and I thought that would be a key driver. Now, at the time, we noted the 118 million float, 61% short interest. I noted at the time I see no pressure for the shorts to cover because this thing dropped from 21 to 18. So I was expecting a little bit more of a decline. And then obviously we saw it get whipped up here in that trading frenzy. So probably not a lot we could take out from the earnings release. But I guess the thing I would note, Scott, would be that they did post some pretty poor numbers before this short squeeze frenzy came in.
Yeah, for sure. I mean, you can see how that obviously happened, and the price, more than doubled in price throughout January. That momentum has obviously been drawn away, and now you have price action trading back at some support levels, right around that 25, 24 area, which is basically the mid-January pullback. And if you go look at the left side of the chart, it was actually the October range highs around that 24, 25 area. So you can make the case that the technicals are showing some interest in this name. I'm sure let's see if I can get a Fibonacci retracement off the recent lows to the highs. Yeah, that's well below the 62% retracement. So off the high here. So nonetheless, I think it's an okay area if you're looking to buy some. But as you said, Gavin, the fundamentals probably aren't supporting the move, and there's probably a lot of trapped longs in this name and whatnot. So from a trading vehicle, it's got huge volatility. So if you're scalping and day trading, it should already be on your list. From an investment standpoint or swing trading, yeah, there's better low-hanging fruit out there than a wild one like this, in my opinion.
Yeah. All right. Next up, Conagra. We'll just briefly touch upon this. We had noted this one as more of a steadier trade with paying a 3% dividend. It fell off a little bit following earnings breaking below the 200-day moving average, but now we have it climbing back up above 34. I'm expecting it to spend most of its time between 34 to $38 here, but I just wanted to point that one out. Next up, Constellation Brands. STZ. Following the earnings, we talked about the likelihood that it would test its all-time highs, which at that point were at 236. It got to 240, breaking through that, but we've seen it roll over since then, Scott. Broke below that 20-day moving average last week, and now we see it just kind of hanging around on its 50 here. The reports, they had a 92-cent beat. Revenues are up 22% year over year to really blow out expectations. Beer sales, obviously, a big item. Company also authorized a 2 billion share buyback. And that buyback really has me intrigued here was it tests support levels. But not looking like a bad swing trade, in my opinion, Scott, after holding the 50 here.
Yeah, not too bad. You got a nice floor around 210. That would be the short-term line in the sand beneath the 50-day moving average. That if it did break below 210, I would definitely be concerned or get out of my position of sorts. So, yeah, I'll give you the benefit of the doubt from the bigger picture time frame. We look at a weekly here. You can see that long-term multi-year downtrend for the last 2 years, at least 3 years, has been broken back in late half of 2020, and could make the case that, like I said, that 210 area definitely was significant on a longer term weekly chart here. So, yeah, like with the benefit of the doubt that it's in context of an uptrend, it could be rallying again.
All right, moving on to January 8th here. Big name that was out that morning was Micron, MU, and we want to keep an eye out on this one. Now, at the time, the stock was trading right around, I got it here at the right around the 84 level it had popped up to. So it's
Hmm.
down a little bit. It had that quick pop on earnings, and then it rolled back over to 78 before climbing back higher to 86. Now, it did see some selling pressure last week. You could see a break of the 20-day moving average there, dropped to 73. So going into earnings, it was trading at 77. So this was one of those kind of sell the news fades. Now, this would have been a few days afterwards. So I guess that's the one notable thing I would be looking at. But it is climbing back up, getting above that 20-day moving average to 81.10 there, and looking to slip back towards 86. So pretty similar chart, I would say, to STZ. Maybe a little bit more volatility. But you got any thoughts on Micron? And this was following a really strong report where they beat by 9 cents. They beat on revs. They had guided their Q2 outlook above consensus there. So you got any thoughts on Micron?
Not at this stage in time, but I do like the overall trend. I do like the sector. The SMH, I've mentioned this before, has been, one of the leading groups here to start the new year. Had a strong performance in Q4, and so semiconductors are just kind of in favor. So buying them on pullbacks, I think, is wise. I would definitely, get your favorite oscillators out there, like the RSI or stochastics or MACD or whatever it may be, and wait for those opportunities for them to come down to below the midpoint, around the oversold territory. If you can line it up with a key support level or a key moving average in context of the uptrend, you can buy some nice weakness in context of these strong sector trends and everything else. So, but right here at $81, I mean, I don't really see a whole lot to do with it right now.
Right. Yeah, I'd agree with that. There's probably some better semiconductor plays out there. Another one that was out this morning, a recent IPO on the cloud computing space, Duck Creek Technologies, ticker symbol D as in duck, C as in creek, T as in technologies. So at the time, we talked about that these were pretty solid reports, and I wanted to see a move above 43, and I'd get involved with it at that point. This thing rallied above 43 and ripped up to that 53 level before getting caught up in some of that profit taking that we were seeing, which brought it back down to 46. I found nice support here, and since then, some nice volatility leading us higher. Now, I am seeing it get rejected at 53 again today, Scott, so I'd be curious as to your thoughts on this current price action here.
So it was a recent IPO a couple months ago, and when it comes to IPOs, I like to see how it behaves within a few quarters. I would say this is a pretty solid move here. I mean, the stock made its debut in August. Here we are approximately 6 months later, and it is trading back up near all-time highs. So it's probably off the radar of a lot of people. I've never heard of this personally, but it's in a strong space, being in the software area, and it's breaking out to new highs. It's pretty volatile, to say the least, so you have to have the proper position sizing. But it's definitely worth a name. If it's not on your radar, maybe you want to take a little bit of a closer look at it, at least above this, this recent support level that it found at resistance in that 46 to 47 area. So I do like it above that level. A little bit overextended short term, like you said, it's been rejected at 53, extended above the 50-day moving average and whatnot. But I'd keep this on the radar, do a little research, see if it fits your criteria of investments.
And then just if you're curious here, it's a 63 million float
Okay.
with a 6% short interest. So, I'm not saying that it falls into the realm of what these short squeezers are going after, but, we'll just kind of keep providing this information. Also, Accolade ACCD. This is basically a healthcare benefits platform, cloud-based, so it kind of checks all the proper marks that one wants to see there. At the time, the stock was pushing above its 50-day moving average, which was right around the 46 area at the time. The stock was holding steady at the 42 area ahead of earnings, so nice move post earnings there. And I was talking about it at the time. I wanted to see the stock move above its 50. It obviously did that. But now it's come back down after hitting 60, which is where it saw resistance in December to roll back over and test its 50. But again, seeing a nice little bounce here, Scott, with some pretty solid support in the 50 to 52 area.
Yeah, to be honest, Gav, again, I'm not really big on trading IPOs and whatnot. So this one did make its debut as well last year. Um, but I like this price action. It made its debut in the summer of 2020, and it's acting great here 6 months later. So that's always a sign, I think, in my experience. It has pulled back recently to the 50-day moving average, and to be honest with you, Gav, this just showed up on the TA page scans for this week, and I thought it was a typo. I think I typed in ACDC when I initially was looking at it, but it's ACCD. And at first I was like, why is this even showing up? But yeah, it fits all the criteria for liquidity purposes, volatility purposes to make the TA page scans. But it showed up because it's around the 50-day, 20-day moving averages. It's pulling back in off the highs. And it's also was an inside week. So if I switch over to the weekly chart here, you'll see that last week's pullback remained inside of the prior week's high there. So right now, I would just say, the psychological $50 area seems around the 50-day moving average, give or take, maybe 49, 48, if you can give it some wiggle room, is looking pretty solid. And this company, lifting out of that recent pullback from last week's inside week, it looks like it wants to make another leg higher. It's not on my radar, but it is now, and I think if they go well, it could actually be trading back up around 60, 62. So we're earnings the 15th on that gap for ACCD when it came out. Did I lose Gavin completely?
Sorry, Scott, I had a quick mute there.
Sorry.
Their earnings were on the 8th, which I believe was a Friday, right?
Uh, Yeah, it looks that way. Yeah. All
Yeah.
right, so that was it. So I don't know what that gap was there on the 15th, but regardless, you do have gap support also acting there at 50. So this is another name I would take a close look at, see if it fits in the house of trades and whatnot, because it looks pretty darn good technically above that key support around $50.
All right. Next, we're going to move on to Jan 11, which there's only two names out, neither one all that exciting. AZZ was one of the plays there. And, they had pretty good numbers there. That 8-cent beat. Revs were down 22% to miss expectations. So they had a top line miss, but it really doesn't seem to be disrupting the stock at all. The company also authorized 100 million share repurchase here. I was expecting it to see a little bit more resistance following these numbers, but it's been holding in pretty well, just trading in a sideways range.
What's the ticker there, Gav?
AZZ.
AZZ. Okay. Yeah, I agree with that assessment. I think you're right. Nice attempt at break out here to start February, after pulling back to that key support level, rising 50-day, rising 20-day. Looks pretty good. Let's just switch over to a weekly, see if we see any more information revealed there. Look at this weekly. So you do have some resistance going back to about $50 all throughout 2019. So that is somewhat of a headwind, but at the same time, it's been consolidating up here better than it usually has in the past. So yeah, I like to keep on the radar there to see if we can get through $50. That's a pretty good move there.
All right. We also had CMC out that day. Metals play, obviously. Keeping an eye out on this one. This one's saw a little bit of a rollover post there. Well, they had the spike going in ahead of earnings, and this is kind of where we started seeing some of that sell the news reaction. It came back down and tested 200-day moving average right around this 20 psych level. So that's some pretty big support for us to keep an eye out on. They did miss on the top line, so that was certainly notable. But the commentary around it was pretty good for the company. And at the time, I thought we could see a potential breakout above 22 to 24. We have not obviously seen that. It's rolled back over, but looks like a sideways trading range to me forming here, Scott.
I'm sorry, Gav, I need the ticker again.
CMC.
CMC, commercial metals. Um, Yeah, it's very choppy action. I mean, right off the bat, when I see something like this, I don't really get too excited about it because it just tells me that it's under some sort of either heavy accumulation or heavy distribution. I need some sort of breakout or something significant to happen to really kind of get me excited. Usually it pays to go look at a monthly time frame when you get something like this. And even that looks really choppy, sort of behavior going on there. Not really my typical stock that I like to participate in, unless I was, how's the dividend yield in this thing? Over 2%. I'd have to look at this. I'd have to look a little bit further into the industry itself and the yield and see if it's a longer term play, but not from a short term trading perspective. So. Gav, just to cut you off quick, it looks like Trend Tracker did put a buyout there, as we were talking a little bit ago, about 5 minutes ago, on this IACA. So I just wanted to share that with people out there that technically not a bad-looking spot to get involved in. I mean, from a swing trading perspective, I think you had that aggressive slide the last 6 days off a huge gap up, but that seems to be the right support level right in place right there off the, let's go with $12 to $13 area that's been in play with the rising 20-day moving average to your backstop. So not too bad of an entry point there. A low risk, low probability, I should say, a low risk, higher probability trade for it to maybe wrap out of that.
Yeah, I like that call. So we'll keep an eye out on that.
Mm-hmm.
All right, Scott. Next up. So there is a couple of guidances that they GWPH, which we mentioned earlier, guided, and we'll also take a quick look at Lulu. But play, which I'm interested in here, Scott. I know you've had a long history of this one, but this is one I'm surprised this didn't get really thrown in with the GameStops of the world. This is a 38 million flow to 25% short interest. It just has the feeling of one that all these bandit day traders would gather behind. They probably spend a lot of their time there when COVID's not around. But yeah. BLAY, you got any thoughts on this? It hasn't really seen the big rip out that we've seen from some of the other names, but it's definitely been a pretty nice steady mover.
I gotta admit, Gav, the last 2 weeks I've been watching this. I thought it was going to be one of those names that was going to be GameStop and AMC or Express or whatever it is. It has all the right criteria, like you just said. Low float, high short interest. They didn't take it. I was surprised. So what does that tell you?
Yeah.
I don't know. Anyway, yeah, this stock. This was one of the names that really took it on the chin there during the COVID crash almost a year ago. It's one of the first ones I noticed in late February, just taking a nosedive below the 50-day moving average and just really not finding any sort of support, which kind of gave us the heads up that the market was in dire straits with a lot of these retail places getting shut down, etc. But yeah, that thing just completely. And then pretty much after the March bounce, I shorted this thing into almost every single rally that got too far from itself on all different occasions. Pretty much, I think I just, right, Kev? I think I shorted at least 5-6 times throughout swing trading perspective throughout 2020 and made some really good money on the downside there. I stopped shorting it.
Thankfully.
On this. Yeah, I did. I stopped shorting it after this gap up in November. It was a multi-month breakout, and there was just this underlying shift in the market that we saw in a lot of different stocks and everything else going on. Plus, the vaccine started to roll out too in that latter half of the year there. So it just seemed like it was just not getting the job done. A lot of analysts also coming out during Q4. Putting higher targets on this stock and saying how they're getting loans from the bank to sustain their mortgages and stuff like that. So, yeah, just kind of stopped shorting it. But anyway, going into to recent action, it's just very choppy behavior. I don't know what to do with it. I'm not really keen on getting along it, and I'm just surprised that no one's taken it for the short squeeze ride yet.
Yeah, yeah, but one I guess to have on the list. Maybe you put a buy order at like 50.
Yeah.
Something ridiculous like that. Not that I'm recommending it, but
No, no, yeah,
at the way this market's going. But yeah, one for us to keep an eye out on moving forward.
yeah,
All right.
sure.
Um, okay, so then we're moving on to the 14th at this point, January 14th. This is when we started seeing a little bit more of a pickup in the earnings, and there's some good ones out on the morning of the 14th. Starting first with Delta, DAL, which at the time was trading right around the 42.64 area. So it's down about 8 to 10% since then. Recorded a pretty big loss there. No surprise. 8 cents worse than consensus. They did beat on revs, but it was all about their cash burn. And they did show some signs of improving that. It was down to 12 million a day. The guidance for Q1 was a little disappointing as bookings remained light. I think some people were hoping for a little bit of a bounce back there, and that's really what's weighing in on the stock more than anything. The company was battling its 50-day moving average around 39 at that point. It's since slipped through and below that here. Um, so I'd be a little cautious of this one. Any break of this 38 area, and I think we start talking about a possible test of that gap up 34. I'd maybe be looking to buy it at that point, Scott, but I don't have a big interest in getting involved with this one just because I think there's better ways you can make your money. Unless it broke over that 40 area and sustained that, and then started going in a sideways direction where I thought that we could get a nice grinding pattern through 43, 44. But I'm not in a hurry to put any money to work here.
Yeah, I'm not a big fan of airlines in general. I mean, unless they start really kind of getting to extremes, to the upside or downside, I don't trade them in ranges at all. Uh, they all look the same to me on the charts too. If I switch over to the Jets ETF here, you can kind of see really very few differences between Delta and JTS when I make the switch there. So just be cautious on the group as a whole. Not to mention too, Gav, crude oil and gasoline prices have both been on the rise over the last 3 months. So I don't know if the capacity is being filled in all these planes or what they're doing to manage everything, but you have to take into consideration that we do have higher crude oil prices and higher gasoline prices that are, that's a impediment on a lot of these airlines on their top and bottom line. So
Okay.
things to
Um,
manage, right?
yeah, so we're just going to get through this day, and then we're going to answer a question that came in a feedback, Scott. BlackRock was out that morning too. I never really have much of a feel for this stock. I mean,
Mm.
this is more of a buy and hold for me. It certainly can be volatile, but I just never seem to really trade it all that often. You got any thoughts on BlackRock?
Yeah, I agree. I don't trade it that often either. For it's a very expensive stock to trade, and it doesn't trade a lot of volume either, and
Yeah.
that just makes it more. The liquidity really is difficult. You gotta have to compensate for the added volatility that's associated with it. Trades like somewhere around 600,000, half a million shares on any given day. So it's just very volatile. It's a good move if you can catch it right, obviously, but it's been acting really well here. Recently, peaked out mid-Jan and pulled back to the 50-day moving average, give or take, getting back above it. So that's a good sign off the 700 cycle level. It is what it is. Let's take a look at the long-term charts here if we can just see if better trends are in place. So yeah, that monster breakout in September or October of just last year, over 600. And from an investing standpoint, that would have been the more ideal, new high breakout entry point. And then it's just doing well. It's just kind of chugging along in context of a strong weekly, monthly uptrend.
All right. We also had Afria, APHA, out that day. You can see that when Scott pulls up the big break above 10 into the double digit range. Scott, you always talk about that psychological break above 10. That's very meaningful to a stock. And then a sideways consolidation, which we always
Hmm.
talk about that too. Scott, I know you're a big proponent of being able to hold gaps and then sideways consolidate. Now we see this
Yep.
moving higher too. So obviously, is it stretching past its valuation? Yes, but we certainly are expecting some legislation to come down from a Biden administration that will be favorable to marijuana, which very well will be a sell the news reaction, I think, given some of the
Oh
runs
yeah.
that we've seen. But
Hmm.
yeah, I mean, that's the general theme that we usually see play
Yeah.
out.
Okay.
But good looking chart. So I think that this one has some extra room here, as long as it holds above 1350, of course.
Uh, 1350. That's pretty tight, right?
Well, I mean, if it comes back reversing down below
Yeah.
that and
Yeah.
stuff,
Yeah.
then
Yeah.
if I'm buying it here, is my thought.
Okay.
I'm putting a stop at about 1250 at the most. I don't want to risk much more than that because I would think that that could be a potential false breakout if it drops below 1350. I'd be a little cautious.
I see. That's a good point. That's a good point. Yeah, you'd probably have very choppy ranging action between 12 and 14 if that was the case. You do have a very strong, almost parallel like move going on between the price action and the rising 20-day moving average to meet it. I'm a little bit more lenient when it comes to low price stocks because I don't. I'm aware of the volatility that's with it, so I would just, kind of just watch the 20-day moving average as my key risk factor, which looks around 1150 to 12. But overall, like you said, Gav, this group, marijuana, has just been really climbing up the right side of the charts here the last 3 months. Here's the MJ ETF. I track. I highlighted the group. It was the first comment I think I put out this morning saying how the group was showing decent relative strength after this recent 2-week consolidation pullback ranging activity and had the potential to move higher. And sure enough, names like Tilray breaking out to the upside, Afria, Kronos is another strong name breaking out there today. ACB is another one that caught some nice bids above yesterday's pullback high. CGC has been the leader in the group, Canopy Growth. We both like IIPR as probably the longer term investment, stronger trend in play there. So MSOS is another ETF that someone's pointed out to me. It doesn't pay a dividend, but it's much stronger in price activity and capital growth than the MJ. But yeah, the group looks fantastic. Afria, like you said, just be careful chasing it up here at these levels. You do have to manage your risk going forward if this whole group starts to fail a little bit. But bigger picture charts. I mean, bigger picture like weekly, monthly time frames. Yeah, the group remains hot. You got to watch it on these pullbacks and watch it on these consolidations.
All right. And then the other big name that night, that was Taiwan Semi, TSM. At the time, we highlighted the impressive CapEx guidance. The stock was trading right around 123 or so, so hasn't really gone up, done too much. It rallied up to 135 before rolling over and coming back to the 123 area. So looks like it's kind of setting up for a sideways consolidation potentially between 120 to 135. But really, the news was great for the semiconductor space. However, since that news has come out, we really haven't seen semis being able to press the advantage at all, Scott. The SMH was sitting right around 238. We talked about some of the companies that benefited from the announcement was ASML, which broke above the 520 area. It's sitting around 555. So nice move for ASML. AMAT was another one that benefited from this, but I can see AMAT hasn't had a very great reaction since that news. We got CLAC, of course, as well, and LRCX. So we had the run up into Taiwan Semi that seemed to price a lot of this stuff in. Once that news came out with that huge capex guidance, really haven't seen any of the semiconductors being able to parlay that into a big move higher here. But they are putting in some sideways consolidation. So at the moment, I'd be okay with this price action.
Yeah, I agree with it. I mean, they can't argue with the trends that are in place here. They just got a little bit too far ahead of themselves over the last couple of months, especially here in that relative strength time frame that they showed there and to start the new year in 2021. Pull back to the rising 20-day moving average, attracted bids. You gotta love that from a technical perspective. So it's just kind of riding the momentum higher. I agree. It does look like it's more range bound over the next few weeks than it is going to be, continuation to the upside there. So just keep it on the radar. Obviously, you should watch the SMH itself. As your guide with the rest of the group, what the rest of the group is doing. But yeah, looks good. It's basically due for a rest. I like the whole group relative strength wise, as long as they stay above their rising 50-day moving averages.
All right. And then the final day of the week, and we'll wrap it up on this day too. And we'll be back tomorrow doing more of this. If people like this segment, please feel free to write in. Let us know what you'd like for us to take a look at. But that was, of course, the Friday with the big financials going on. We, of course, had JP Morgan. And we started talking about the sell the news reaction. And Scott, you did a nice job of taking a short in it. For my part, I noted that there'd be some profit taking following a big run, but I wouldn't be overly concerned. And I'd view the 125 level as an ideal entry point. We got down to what, about 127 there, Scott, 128, call it, and
Hmm.
it bounced back, and it's moving back up towards that 134 area. Now, I believe you're still short this, are you?
I am. It's on my list of stocks to salvage here. I started around 138 post earnings. The logic there was these stocks made a really strong run up into the end of the year as well as to start the new year. JP Morgan, Sachs, Citibank, Morgan Stanley, Bank of America, all the big banks right ahead of their earnings reports. The earnings came out. They didn't really react strongly to them in any regard. There was no disruptive gap to the upside or downside. And then the earnings season, that was all on a Friday too. It seemed like Friday and a Monday, and then all of a sudden we started going into some of the regional banks for the next few days, and then that was it. The financials were done reporting, and we were moving into the technology arena, and the shift of the focus of the market went back onto technology names, back on small cap squeezes, etc. And I felt like that was just a good opportunity to basically quietly step in post earnings at a place that was showing resistance around 40 on this down day here. So we just kind of got short around, I think it was 138-ish on that down day. And, it never went back up to 140. So we were just kind of waiting to see how far it was going to go down. I mean, I had the gaps as targets, so I took initial partial profit on the gap closures around 134, 133, which also met the 20-day moving average at the time. And then it was just trim and trail from there on out. And then we were lucky enough to capture a big gap down just over a week ago to close this other gap down around 127. So that was a nice 10-point gain on the remaining partial profit swing short there. Here we are today with bids coming back into the financials. Price actions getting back above the prior week's high, and the 20-day moving average still about $4 in our favor. So I'm going to be looking to salvage the balance here sometime. Probably if it pushes again higher tomorrow for 135 or whatnot, I'll take the remaining 3-point profit on that one. But you look at the rest of the group there. Overall, bigger picture, just looking great in context of a multi-month uptrend above the 50-day moving averages, getting back above pullback levels here. Goldman Sachs, you can see similar price action in that name there. Just breaking it out to the upside. We'll take a look over at Bank of America. Similar move, got back to the 50-day moving average as of late, breaking back out to the upside. Citibank was a little bit more of a laggard, it seemed, and that probably was even another name that, was a reason why I got short JP Morgan, was just the laggardness going on in Citibank at the time. But yeah, they all seem to be kind of bouncing a little bit, so context is key here, and not to mention financials are also a strong major component of small caps. And if we take a look at the small caps IWM, very strong, powerful, uptrends in play above a rising 20-day moving average with price action lifting out of that 4-day pullback, which was about 5 or 6% off the high. Looks pretty healthy to the upside, and financials are going to lead the way.
All right. Well, that covers the other two as well, Citi and Wells Fargo.
Yep.
So I think we're good to go there. So, Scott, just going to answer two feedback questions, and then we'll wrap up this particular segment.
Okay.
But one was a question about RVP. Person's looking for a short-term scalp, maybe a good entry. Hold on. Either of you have any thoughts on RVP for a short-term scalp? I guess he means for a long. My bad. Maybe a good entry on the pullback. I think 15 to 16 would be ideal now. RVP. People are wondering, is this syringe play? So obviously, with all the vaccines going out there, this is being picked up on that front. Um, I'd prefer to see it drop back down to that 15, 16 area. I don't know if you'd be afforded that opportunity. But if not, then I would have to see it moving back above 20 in order for me to get excited for a breakout. That's how I'm looking at this one, Scott.
Yeah, I mean, when you're looking for trades, I mean, the best thing to do is always look at multiple time frames. I can't stress that enough. Here's RVP. You can see it's ran up to new highs on this weekly time frame here, so you have a lot of increased volatility as of late, as a trading perspective. We highlighted yesterday on, breaking out to new highs over 20. It's pulling back. It's very wide and loose action, so it's difficult to kind of find key levels to kind of latch into. But you can always use prior highs, prior resistance levels as just kind of your guideline of where you might be interested. And I find it interesting that the December high was around 1579, and then you had this kind of choppy action about a week ago into end of January around that same $15 to $16 vicinity. And then from there, I would just basically go down to different time frames, to a 60-minute time frame. Look for gaps. Gaps can be pretty important, and other intraday highs. I look at these intraday highs here. I can see that there's price action around the $17 area. So I'm going to draw a line across there. That seems to be old resistance, potentially becoming new support. If it drops a little further, I have this line here around 1665 with a rising 50 period moving average on a the 60-minute time frame, so that might be another interesting level. For the upside, I see pretty significant resistance right there around $19 intraday, so that's another one. And then you just keep going down to whatever time frame you want to trade. Look at a 30-minute time frame, and maybe you can get a little bit tighter on your zones. Rather than being a full dollar of an area of interest, maybe you can narrow it down to maybe 50-cent zones. Then you go to a 15-minute time frame, and you can probably even make it even tighter to trading things in the quarter size zones. And you can start using other different areas based upon different time frames. So looking at this right now, it kind of seems like a no man's land. I would just kind of pay attention to it right now. I mean, if I really was desperate for a long entry, I would look to see a place where shorts would have to cover. And on this 15-minute time frame, I would say if price action started ripping back up through 1837, I would say that then they would be some short covering going on, just because of the recent reversal that happened here right around that 20 period moving average, and then maybe you get that squeeze up to 19. If it breaks over 19, obviously that would be another move there. So if looking to buy weakness, like I said, you got to just start drawing those trend lines and focusing on more of the zones that might come into play. Second question there,
Yeah, the second one is about VYGVF. This is Voyager. This is a digital coin exchange. It's crypto-only brokerage, I should say, not an exchange. So I don't know the name too well. I know I've been involved with the Diginex in that realm. But I mean, if you're looking at the breakout, again, it's VYGVF is the ticker. It's a good looking chart. Run through 650 there. With the doggy coin move and stuff like that, I could see this getting some action behind it. I don't feel comfortable enough really making a call. if I'm looking at the chart, it does look maybe a little extended for my liking. I could see a run up to 10 at this point, which is 10% higher from where we are right now. I wouldn't feel comfortable telling somebody to sell or buy it, though, to be perfectly honest.
Yeah, I mean it's an over-the-counter stock, I believe, right? I don't
Yeah.
think it's actually trades in the Nasdaq, is my guess, given that symbol, that long symbol. But yeah, volume's there, liquidity's there. It would actually, qualify as a zipper candidate. Strong trends over the last couple of weeks and months to the upside there. So I don't know much about it either, but it's a little overextended, I would say, on the short-term basis. But a name that if you can, tolerate the aggressive swings movement in it, and you can, more importantly, identify your risk of where you would have to get out if things turn sour on you, then yeah, it's a viable trade.
All right. So I think that's going to do it for this particular segment. But we will be back on tomorrow. Well, I mean, we'll be back on here in about 30 minutes or so,
Hmm.
call it 25 minutes to go through the evening's earnings. We obviously got Amazon and Google, and we will also be doing this segment till we play catch up with all the earnings that have come through. And hopefully you found this helpful. Feel free to write in and let us know what else you'd maybe like to see on the segment. But that's going to do it for right now. I am going to hopefully post this recording without any issues. We'll see how that goes. And again, we'll be back on at 2:30.
All right, cool. See you
All
again.
right. Talk to everybody soon.